Okay, welcome to today's class. Today we're going to look at returns, assessment, collection procedures. Now, this is an important topic in taxation, and a lot of theories in terms of subjectives and obligate questions come out from this place. So today we're going to look at tax return. What is tax return? Tax return is a document that the law requires that every company should file with the Federal Inland Revenue Services at the end of their accounting year, 6 months from the date they close their books of account. They should file their tax return. This is actually required by law. Now, tax return, upon being filed, must have three paramount documents inside. The first one is audited financial statement. The second one is tax and capital allowance computations. The third one is self-assessment form. Then, aside these three documents that must be in the tax file, the law requires that a director of the company should sign an undertaking stating that, to the best of his knowledge, that the information provided in the tax return is correct and not false. So that is that about tax return. Now we'll look at time within which to file tax return. The law requires that a new company should file their tax return within 18 months of commencement of within 18 months of registration of the business, or 6 months after their accounting year, whichever comes first. So if 18 months from date of incorporation comes first, or 6 months after the commencement of the business comes first, they should file a tax return. That is that for that about time. Now, what of a subsisting company? A subsisting company is a company that has been in existence for more than 1 year. So an existing business is required by law to file their tax return 6 months within 6 months after the end of the accounting year. Registration. Now we're going to look at registration of taxpayers. The law requires that a company should register with the relevant revenue services. There are two types of registration that the law requires you to make. The first one is income tax registration, and the second one is value added tax registration, which is VAT. So as a company, you are meant to register with the FIRS in these two regards: income tax and VAT. Upon registration, you will be issued TIN, tax identification number. You will be issued TIN, tax identification number. Now, this confirms, and this tax identification number is to be quoted anytime, any day you are doing a transaction with the Federal Inland Revenue Services. That is that for that. Now we'll continue. The next aspect of now is the information that you are required to provide when you want to register with Federal Inland Revenue Services. The first information is company name. You must state your company name. For example, your company name could be Michael or Bill. You understand? Group of companies. Your company name could be Tax Returns Group of Companies. Your company names could be Fan Group of Companies. Your company name could be Laptop. Anything that is your company's name, you are to provide it. Now, business object simply means the nature of business you do. Is it transportation? Is it aviation? Is it importation? Is it distribution? Is it manufacturing? You must state the business object of your company. The next information you must provide is the registered business address. The registered business address is required to be provided. Another one is date of incorporation. Date of incorporation is required to be provided. Another one is date of commencement of business. Another one is auditor's address, banker's address, tax consultant address, then memorandum and articles of association. Then we have Form CAC 2.1, Form CAC 2.2. Form CAC 2.1 deals with everything about the shareholders. Form CAC 2.2 deals with everything about the first directors of the company. So now, if you are registering for VAT, you must fill VAT Form 001. You also must fill Certificate of Incorporation. Now, VAT Form 001 is registration form for value-added tax agents. The content of tax return. I have already mentioned content of tax return. The first one is audited financial statement, income tax and capital allowance computation, completed copy of CIT, completed copy of TAT, evidence of payment of CIT, and evidence of payment of TAT. So these are what you must provide in your tax return. Are you there? Good. So move down to the next one, penalty for non-compliance. What are the penalties you face as a company if you fail to comply with tax return filing? The first one is you will pay 25,000 naira in the first month of your default. Now, for example, if you are making up your account at the end of every 31st December, you have until 30th June of the succeeding year to file your tax return. Whereby you fail to file your tax return, you will be fined 25,000 naira for that failure. Then additionally, you will pay 5,000 naira for any subsequent month you fail to file your tax return. Now, if there is any director, secretary, or any person who is found guilty of trying or not to file tax return, he or she will pay a fine of 100,000 naira or face 2 years imprisonment. So we now have assessment procedure. That's the number two item we're going to look at. Assessment procedure. Now, the first assessment we'll look at is self-assessment. The Nigerian tax law has introduced what we call self-assessment regime. As a taxpayer, you are expected to be self-compliant in accordance with self-assessment regime or returns. You will prepare your financial statement. Only you by yourself will compute your tax liability. Only you by yourself will pay this tax liability in the designated bank. Only you by yourself will provide all the evidences that you've made payment, that you calculated your tax liabilities, that you prepared your financial statement that was duly audited, and file it with the FIRS. That is self-assessment return. And this is what we call tax return. You understand? The note to be made available to you, as I said. Then additional assessment. What is additional assessment? The FIRS retains the power to subject any corporate taxpayer to additional assessment where it is of the opinion that the taxpayer had paid a lesser tax in the time past. You see, so or the tax you filed, they supposed that you filed a lesser tax. Based on templates best known to them, they can issue you or raise additional assessment. I hope you understand. Good. The next one is best of judgment assessment. Now, where you failed to file your tax return within the 6 months stipulated by law, the FIRS retains the power to raise a best of judgment assessment on you. They can just say, okay, since you didn't file your tax return as at 30th June, you are hereby meant to pay 100 million naira as tax liability, whereas in real sense your tax liability is not up to 1 million naira. You understand? Good. Now, where best of judgment assessment is raised upon you, you have a maximum of 30 days to raise an objection. If you don't raise an objection, you pay that tax liability. But if you raise an objection, you won't pay the tax liability. It will now be addressed by the tax appeal tribunal. So that is that about best of judgment assessment. Then we have back duty assessment. Back duty assessment is just like additional tax assessment. Here in back duty assessment, you have been found or suspected of tax fraud or evasion. So the FIRS retain the right to review your account without any time limit and raise back duty assessment on you. You understand? Then service of notice of assessment. You see, FIRS shall arrange to serve you notice of assessment. You understand? Where they are of the opinion that the tax payable is lesser. You understand? That the place is lesser, so they can now raise notice of assessment on you, telling you to pay a higher tax and stipulating the amount you pay, and also stipulating where you pay it. We have different tax FIRS offices in different places in Nigeria, so they will tell you where you are to pay you, and it is based on proximity, the one closest to you. So we have final and conclusive assessment. When is assessment said to be final and conclusive? They always ask this in the exam hall. ICAN likes this question. You understand? Now, one, where you failed to raise a reasonable objection within 30 days. That's the thing. Second one is where you have accepted the refusal of notice to amend. You can also hold where the tax appeal tribunal has finalized on your objection with the FIRS. So we now say that assessment is final and conclusive. So that is that for that. So now look at collection procedure. How do we collect that? There are two bases in which we can collect tax. One is notice of assessment. I've said it earlier on. Another one is self-assessment. Now we'll look at this again. Self-assessment is the first one we'll look at. Tax is payable within 6 months after the end of the reporting period. So where you fail and you are to make this payment in lump sum, or you pay instrumentally, which shall not exceed 6 times as approved by the FIRS authorities. Now we have notice of assessment. Where you are served notice of assessment, you have 2 months to pay up the tax. And where you failed to pay within that 2 months, you shall be fined or penalized. The first one is 10% of amount of tax payable and interest at commercial rates payable on annual basis. So we now look at the last item, tax clearance certificate. When we talk about tax clearance certificate, we are actually looking at a document that taxpayers were required to use to make some transactions in Nigeria. Now, for you to be issued TCC, you must apply. You understand? You must apply. So TCC is a document that the relevant tax authority have satisfied themselves that the company that is applying or the applicant individual is not owing any tax as at the date of what application, and tax your tax history shall be reviewed 3 years back. So we must satisfy that. Let's assume you are, for example, applying for tax clearance certificate today. We must satisfy that you were not owing us tax as government last year, last 2 years, and last 3 years. So we necessarily do not consider the current year. You understand? We don't consider the current year, except where you are leaving the country permanently. That's only when we will say you must clear your current tax liability. But peradventure, you are still a citizen residing and resident in Nigeria, you would only be cleared for the past 3 years. So that is tax clearance certificate. There are conditions upon which you will be issued tax clearance certificate. One is you are not owing tax. Two is you don't have any tax outstanding, and also you have been cleared that you don't have any tax. Now there are information that must be disclosed by the TCC. The first information is your revenue, your assessable profit, your total profit, tax payable, tax paid, tax outstanding, other income sources, and the expiration date of the tax clearance certificate. So it has expiration date. Another information that the certificate will disclose upon issuance is TCC number, your tax office, the tax office where you normally pay your tax, date of issue, company name, RCC number, date of incorporation, taxpayers, TIN, business address. So these are the information that TCC must have. So for you to file for TCC, you must show your revenue for the 3 years, you must show your assessable profits for the 3 years, you must show your tax payable for the 3 years, you must show your tax paid and tax outstanding. Now, I've gotten a lot of questions from people asking me how to calculate TCC. I said, no, you don't need to calculate TCC. See, TCC does not have any calculations. All you just need is the information. So you ask your client, are you owing any tax? He said no. Oh, yeah, let me see your audited, your tax return last year. Let me see your tax return last 2 years. Let me see your tax return last 3 years. Then you get a compendium of the 3 years and submit for the processing of your tax clearance certificates. Now, the revenue authorities have 2 weeks to issue you your tax clearance certificate upon application. I hope that makes sense to you. So I talked about conditions. The first condition is returns have been filed till date, tax has been paid till date, all penalties has been paid till date. That's only when you are eligible to file or be given tax clearance certificate. Now we have transaction requirement TCC. Transactions requiring TCC. There are millions of transactions requiring TCC, but I was able to provide about 15 or thereabout. Application for government loan. So when you are applying for government loan, you must have TCC. Registration of motor vehicle, you must have TCC. Application of firearm licenses, you must have TCC. Application of foreign exchange, you must have TCC. Application of certificate of occupancy, you must have TCC. Application of award of government contract, you must have TCC. Application of building licenses, you must have TCC. Application of building plan, you must also have TCC. Application of transfer of real properties, where, for example, your parents want to transfer real properties to you, you must have TCC. So these are everything about returns, assessment, and collection procedures that we've treated. So look at it. The notes will be dropped in the group chat, and you can always read up. If there is any question, feel free to interact with me either as you are watching the class, or you can drop your questions on the WhatsApp group, and need to be entertained appropriately. Thank you for your time and audience.